Hey, what's up, everybody? It's July 30th, 2020, and the New York session just came to a close. The dollar continues to just get destroyed, man. I mean, it's kind of, I'm not going to say unbelievable because we live in unbelievable times right now where you have to wear masks everywhere, and they're saying now that you need face shields. It's crazy, man. What the fuck is going on? But excuse my language to everybody that's new to my channel. But that being said, it's only a matter of time. Things will have to bounce. At some point, I think we are at some resistance. I'm not saying, and I said this in the previous video, that go out and buy a ton of dollars. What we want to do is we want to position ourselves to buy against the dollar. But what we need before that is some dollar strength, man. And when will it come? It's getting crazy out there for sure. So that being said, let's get right into it. We're gonna look at EURUSD. We're gonna look at pound dollar. We'll take a look at gold, silver, the usual suspects that I typically look at, and we'll formulate what it is that we're looking for going into Friday tomorrow. So that being said, click the link below to get started. If you're new to me, my channel, I have an amazing community of traders that from all over the world. I teach people how to profit in the markets using simple strategies that work. No BS, no flashy stuff to lure people in. I trade every day, wins, losses. Today we took a couple losses. We took some L's trying to short EURUSD, or trying to short, I took an L personally trying to short EURUSD as well as pound dollar. So it comes with the territory, man, and I'll be the first to admit that for sure. So, but that being said, we have an amazing community of traders, and we win way more than we lose. We've been crushing it all week. So Friday is going to be a good day to recover some ground. That's for sure. So that being said, let's take a look at it. Let me share my screen with you all. And for anybody that's new and would like access to my group, click the link below to get started. So here we are on EURUSD. One of my favorite traders that I follow, Blake Morrow, is one of my mentors. I've been following his, I've been a member of his analysis stuff in his webinars for years now. Pointed this out, shared this on Twitter. This is a monthly chart dating back to July, or wait. March of 2008. It's 2020 now. So this is a significant level, significant development, significant trend line, significant area of resistance. I was really surprised that we made it this far so quickly. Of course, the Fed is doing anything it can to really destroy the dollar, that's for sure. And with everything going on right now, it is definitely happening. So we have this we're at a significant level now, 118.50, 118.40. Around here, because you can see whenever you have, and this is what I use to mark out with these boxes, is levels that were resistance, broke through, became support, and then you can see we broke down below here. And so this to me makes it a very significant level. So the big question is this area going to hold going into Friday tomorrow? Or are we going to just keep barreling higher? So let's take a look at the daily chart here. And, this, man, I can't believe this rally, because like we were in this consolidation for so long. This is just a ruthless breakout here that's going on. EURUSD. Will we get down to this level? I really doubt it. So next, what I'm going to do, and this was this massive head and shoulders that we were trading for literally years. I remember trading this for a long time. So we have a head, shoulder, and then just a fizzle out and a range. And here we are. We have, this was a bullish flag. Now, typically when you have these bullish flags here, I love trading flag patterns. Nope, that's not what I wanted to do. You can see the flag. This is the flag pole. There it is, pole here. And typically, ideally, if you looked it up in a textbook about technical analysis, the degree of the breakout would measure the flagpole. So check it out. So I'll say that one more time. The degree of the breakout from this flag pattern equals, typically, not every time, equals the flagpole, okay? And so you can see, here we are. Now, while I was talking, from this high here to the low of this massive consolidation, here we are at the 61.8% retracement. So, you know, I shorted it early. I should have waited till we got up here. I didn't think we'd get so overextended, but I make mistakes. You know, I see a breakout like this. I'm like, oh man, dude, it's got to come down here. But if we do get a turnaround, here we are at 61.8, the flagpole completion here. So tomorrow, I shared this in my Instagram story. Tomorrow is going to be big and so significant for the dollar. 130.80 on pound dollar. We've still got some room to run before this, until we hit that 61.8. However, look at the degree that we're overbought we are, right? It's pretty large. And from the high, we're not quite there yet. So this is a massive double top that happened back in 2018. I clearly remember this. And then this massive downtrend here is COVID-19. And here we are back at these levels. So pound looks like it has a little bit of room to run. Yeah, I mean, I don't know if we'll go to 132 from here. That seems like a stretch, but the way things are going, you know, you can't rule anything out anymore. 131.70 is resistance. But what I want to see here, what I would love to see and praying for, is a dip down to this breakout level, which will create a buying opportunity for pounds, and then a move up to the 78.6. The pound, it seems like pound pairs always go after the 78.6% Fibonacci retracement level. So it's my favorite level to look for as a target. So Aussie dollar. So we got a great short position last night. Banked some pips. And here we are retesting these same levels. Actually, I'm going to send out a trade to my group. This looks good. This looks like, as I teach in my classes to my students, we want to sell rallies. We've got confirmation or non-confirmation here of divergence. This looks like a great setup. I'm going to pause this and send this trade out to my group. And if you do take it at home, remember, enter with your own caution. All right, so just got our trades in here. If you watched my my video, or if you're on my live call yesterday, you would have seen that, you know, when we, like, how I put together the pieces going for the dollar, the pound, Aussie. Like, we had that huge breakout in the euro. We had the huge breakout in the pound. Where's it at the Aussie, right? We haven't seen the follow through yet. Let's take a look at Kiwi. So big level of resistance here. divergence, and check out this resistance, right? So this is going to be a big hurdle for us to get over when it comes to Kiwi US dollar. So definitely keep your eye on this. I'm not saying that it's not going to go any higher, but because I do believe we're definitely going to break out of this. We're going to break out of this consolidation, and then, you know, if everything follows suit, then, you know, much higher prices here. This is a weekly chart, of course. So, you know, this isn't going to happen tomorrow. I mean, it could, and at the rate that the euro has been appreciating. So, but this is what I'd be targeting. We're at 66.90, you know, around 71.20, 7200. But first, we just appear to be way overextended right now. So if and when, and that's right now, it's a big if for sure, the dollar does gain strength, what we want to do, look for a good dip here and then buy into that. So, you know, 38.2, 28, 20, even 23.6, you know, that's a few hundred pips off. And I was thinking about this morning when I was walking my dog, that, you know, a lot of times you have this, like, the longer that this just beat down goes, it's like a rubber band. You know, the dollar's going to bounce back. Some people call it a dead cat bounce, you know, when it just had just been hit so much. Sorry if that seems violent to any cat lovers out there, but that's what it's called. So we'll have to see what happens with the dollar going into the weekend. It's going to be a very, very big day. Now, here we are with gold. Oddly enough, though, gold didn't break up. It didn't break out higher. So it looks like some potential weakness. Just don't get too overly zealous trying to short it up here. That's for sure. But look where we are in the monthly. So, you know, euro broke higher, took out a bunch of stops, but gold failed to move. So, you know, that's just something to think about, because trading is all about, and if you're writing this down, taking notes, good for you, for one. For two, just remember, trading's about putting the puzzle pieces together. Once I realized that, you know, the technical analysis part became much easier, and trading honestly became more fun. So this is where we are now in silver. And why I wanted to illustrate this to you is, you know, we're getting a little bit of a lift here. But if we hit this kind of X marks the spot nexus here, you know, that's going to be a good opportunity. Don't get too aggressively short. Remember that. If we hit about $24 or 23.95, they could be a good opportunity to short. And so this is what I'm looking at going into Friday tomorrow. Really, all eyes on the dollar. I would have made a lot more money probably if I traded the cross rates going on, like Euro AUD, Euro JPY, NZD Swiss, those kind of things. But you know, I think what's going on, the most volatility right now is in the dollar for sure. So clearly, and by volatility in the dollar, I mean pairs going against the dollar. So you know, it's not going to last forever. I mean, it's not like the Fed's going to raise interest rates, that's for sure. But we'll have to see how big of a bounce we get in the dollar. Right now on the dollar index, let me just share my screen one more time for you. I was looking at this market watch calendar here, right at 93. So this is one of the lowest spots that we've been in. And I think I was at the gym today, and he said, I just was walking by a screen and they said, this is the lowest spot it's been in the past 2 years. So, you know, it's a pretty big deal. There we are. This is 309. What? But anyways, we're lower than this low here. That was the March 20th, 2020. And this was the market volatility with the coronavirus. So anyways, 93, you know, we did get below that 61.8% retracement I've been talking about on the week ahead video at the start of the week. But you know, tomorrow's Friday, so we'll have to see what happens, and definitely keep your eye on the euro for sure, especially at this level with the 61.8 and the multi-year trend line. Super significant. So hope you found this video helpful. I appreciate everybody, especially all y'all in the VIP group. I love all you guys and gals. And let's finish the week strong, everybody. Appreciate you. I'll see you in the VIP chat. Peace. Click the link below to get started. Peace.